Hi traders, Dale Pinkert here at Forex Stop Hunter on Twitter. Talked about the $60 level, showed a weekly that would be resistance. Talked about stalking the short side of the market. We had a pretty negative day yesterday and we really accelerated to the downside. I talked about the potential of a move to the first 57 and then 55-ish, and if you see a red line there, didn't think we'd accomplish it this quickly, especially what a great news event to fade on OPEC. That was the high of the move. You think they did some hedging up there at the 50-week moving average. I think they got some shorts off up there. You don't know who it was, but I guarantee you the commercials were selling on that news. We came in Monday up $2 and faded all day Monday and really gave up the ghost today after a failure at 59.20. This should be an area of support at this 55 level. It could set up a nice rally. To me, I think that the damage is done when you look at the weekly chart. So now the market's going to have to prove itself to the upside. But as I said so many times, you never go broke taking profits, and you see WTI trading around the $55 handle, about $1.20 from here. You need to go the door on at least a partial position, take some money off the table, reduce risk on the trade, and then trail your stop down to where you could probably have your stop now about 57.60 or even lower. If we get to 55, I don't think you want to see it closing back over 57 again if you have the bear case looking for the January lows to be taken out. So a very negative day, especially in light of what OPEC hoped to accomplish. Doesn't look like that's going to happen for them. Also, the dollar. Want to take a look at the dollar. Talked about it being a counter trend buy last week at the 95.80 level. Low was 84. At that time, I was talking 680 to 97. I still think there's a shot for 97 if you look at what's happening with the RSI. So I think next time up towards 97, it'll be an attempt. I wouldn't like to see the market for sure close back over 97.80. And I'm not looking for a huge dollar, end of the dollar as a reserve currency type of decline. I'm talking about a retest, maybe back down under 95.80 towards a 95.40, where I think the dollar may end up being a longer term buy for moves to above that 98 level. Maybe we push 99 to 102 sometime this summer. So this is counter trend. We're really range trading now, but back at 95.40, as long as we hold 95, it could set up quite a nice long side position trade. Also, something happened with the RBA, and I've been talking about Aussie Kiwi for a while. In fact, we traded the correction from a few hundred pips higher, the 106 range, and talked about the 61.8 level being critical. We took it out, but this candle that we have right here, this big outside candle, and the week that we're having is I'm declaring this correction in Aussie Kiwi to have terminated. We could make a high and head up towards 108. So I think this is a excellent position trade. I don't like to chase anything, but I'd be interested in buying pullbacks towards 104.60, 104.50, risking closes back under 104. If that happens, then we're going to the 78.6 level, and I'll reassess down there. So that's a wrap for me. I believe I will do something tomorrow, even though we're going to be closed on Thursday in the U.S. So remember, don't just count your pips, count your blessings. Good hunting to everyone. Adios.